Hey, it's Wolf here. So today I want to share for a test. I want to see like if you guys like this. So every day when I wake up, I do like 3 hours at least research the first thing in the morning. So right now I'm going to share with you some of the things that I have found out. Okay, so the first thing where I'm looking at right now is layer twos, because like I've been talking about, the next 100x tokens and everything that's like uh, will what happened in the all of the excitement in the next bull run is going to be on layer twos, because the next bull run will be just way bigger than the last one. Okay, that's the first thing that you need to understand. And the second thing, and simply because there will be more people. Okay, simply because the innovation and the user adoption of the protocols will get better and better and better as people and the developers built in the bear market. Anyway, so now you know the next protocols are all of the new protocols are basically going to be built on layer 2 scaling solutions, because why would you build on mainnet anymore? Because it's so costly and so slow. Now you can just deploy on layer 2, and people love it and the developers love it and everybody loves it. So the big new tokens will be on layer 2 scaling solutions. Okay, so I'm really like going in on this. So a couple of things that I have found. First is actually a layer 2 scaling solution that is for privacy and scalability, because through ZK rollup. So this is a new one, and the reason I like this one is because it's a new kind of layer 2, and also as I was doing the research, I found out. Let me show you here. I found out for the let me show you here. So the token sale hasn't even started on this one yet. So this is a completely new protocol for the next bull run. Okay, so this is kind of like the low caps that I'm looking at. And look, you can see that it has received 17 million in funding, and you can see that the leading angel investors here are Anthony Sassano, Stani Kulacho, so the founder of Aave. This guy is so smart. Then the Bankless, these guys have been crushing it every time. Like, these guys are crushing it. These guys know what's up. Okay, these guys know what. Then DeFi Dad, Mariano Conti, and you look at this Vitalik Buterin. Vitalik Buterin has given these guys money to like do their thing, because he thinks that there's potential in this. Like, he wouldn't like give, like, you know what I'm saying? He wouldn't like invest if he didn't think that there would be some kind of potential here. So this is something that I'm looking at. So Aztec, so it's going to launch, I don't know, probably next year. So I want to, we will see. But I don't know if I buy the token or anything like that. But I just, I'm doing the research here. So this is what I found. The next thing that I want to show you here is, so if you have been watching the videos in the portfolio, you know the GMX. Okay, so basically it's a leverage trading platform on Arbitrum. Again, all of the new ones are on Arbitrum, and it's the biggest one, and it has spawned tons of new kind of like a forks of it, and tons of new, like, a lot of people want to do the same thing or want to do it better. But the reason why GMX is crushing it is because people absolutely love to leverage trade. Okay, I'm going to, before I continue this, I want to say that I never personally leverage trade. The crypto space is so volatile right now, which means that there's huge upsides and huge downsides. So it's just fucking moronic to leverage trade on these market conditions. It is just plain stupid. Okay, so, and Warren Buffett also has a saying that listen to this. So if you're smart, you don't need leverage trade, or you don't need leverage. And if you are stupid, you shouldn't be using leverage. So if you're smart, you don't need it, and if you're stupid, you shouldn't be using it. Okay? So that, and GMX is a platform. It's permissionless. Anybody can just go there and start like leverage trading like freaking crazy. And how the protocol accrues the fees is when people lose money trading with leverage, the stakers and the GLP, the basket token holders, will get the revenue paid in ETH or the GMX token. So that's why it's gathering so much fees. So this is pretty much a no-brainer. In the bear market, it's getting so much fees. In the next bull run, GMX can literally just fucking crazy blow up, because remember in 2021, when the 3 Arrows Capital, or this year 3 Arrows Capital and Celsius and all of these borrowing protocols, or another went to freaking zero. Okay, is because they took too much risk. They over leveraged. Okay, so that just shows how much even the wisest VCs and venture capitalists, like, they just, like Warren Buffett always talks about this, like, people just love leverage, okay, because they want to get rich quick. But you can't get rich quick. It's impossible. I want you guys to understand. You can get rich quicker, but you can't get rich quick. You need to. It takes time. So that's why this portfolio. It probably feels uncomfortable to some of you to build portfolio for like in a such slow speed, and investing in the higher caps and then mid caps. It's uncomfortable. It's not exciting, it's very boring, but that's how you should do it in my opinion. And I'm not a financial advisor, by the way, but that's how I have learned through my mentors how to do it, okay? And that's how I'm personally doing it. So I'm just sharing what I'm doing. I'm not financial advising here, okay? Just know that. But GMX, I think that this token got absolutely blow up in the next bull run, which take us, because people love leverage trading, and and it's on Arbitrum layer 2. It has the best momentum. So it brings us to next pick here. So I found this bike. I don't know how I found this. Don't ask me. So it's just like when I wake up at 5 a.m. I just take the morning coffee and I just dive into this freaking craziness that's happening on the markets and that's happening overall in the internet when it comes to cryptocurrencies. Like I don't know. I found this, but anyway. So TracerDAO, you probably have heard this, but right now TracerDAO has actually rebranded and transition to Mycelium. And TracerDAO, so you can see that voted on historic proposal to transition to Mycelium. So you can trade with liquidity leverage, low fees on Mycelium. Okay, so this is exactly the same as GMX, but it's like lower fees and better like usability, and it is on Arbitrum. Okay, it is on Arbitrum, and look at this. So it hasn't even started. The volume is under 1 million. So this is a fucking low cap gem. I'm telling you, this is a low cap gem. So you can see GMX has performed very well in this bull market. So this is kind of like the competitor to it. So I haven't tested the platform myself, so I don't know if it's buggy or anything like that. So I'm not saying to go buy this like crazy. No, I probably don't even buy this myself. First of all, because it collides with my ethos of I want to buy things that really help the humanity. That's why I like Ethereum. I think that it's great. Like it's helping everybody, Ethereum. So that's why I buy it. So but with these protocols, again, people just like trade like monkeys and lose all their money. So I don't think that that's ethical, because first of all, the massive leverage that people use to trade makes even like the crypto is already volatile, but the leverage trading makes it so fucking more volatile. It's insane. It brings these massive liquidation cascades that you can probably see. For example, on the chart, it's like massive like red candles dumping because of people are leverage trading, and at the same time, crypto is already volatile. Okay, and also the people who are leverage trading, they are just losing. Like I don't like it. I don't like to. Like I wouldn't invest, for example, in cigarette companies or something. I wouldn't invest in that kind of like a dark side or gambling. You know what I'm saying? Because it's just it's literally gambling. So it's not smart. So that's why I stay away from this. But I showed you that, like, I just want to share with you that I found this and this looks pretty good to me. Okay, you can see that the thing I like about it, it's a new protocol. It's on Arbitrum layer 2. It's copying an already proven method, and the way it works, it really attracts people because you can also stake MIC token just like on GMX and earn like massive APR paid in. I think it's also, so it's paid. It's a different way on how they pay it, but I think that it's just you can see interest rewards on ETH. See here. So I think that it's ETH. Don't get me. You can but it's the same. It's like real yield people talk about. So that's what and also humans just love taking like our instant reward. People love reward. So it's like biologically this protocol, if it's a great protocol, if it's better than GMX, it may become even a little bit of competitor to GMX. It could work. You know. But I don't know. I don't want to buy it. So I if I would buy this, I would buy this in a sense that it could massively blow up in the next bull run. I wouldn't buy it, so I buy it now and then I sell it in 2 months. I know I don't do that. I don't buy. So I only buy if I want to hold it longer. Okay, so that's I don't buy this and I flip it in for a couple of $100 or something. Like, no, but I'm just saying this could be an interesting play because it's human nature that we want instant reward. Okay, the brain is instant reward, so this brings instant reward. Crazy stupid gambling. Okay, on Arbitrum with zero fees, very easy to do, completely permissionless. It's like this is like a honeypot for like bees. Like it's they will be like, or bears or whatever, saying. Anyway, so this is something that you might want to look into if you are into this kind of stuff. But I'm not into this kind of stuff, so I just keep it. But I think it's interesting to look at these protocols, and in the next bull run we can see like what's happening. But this looks great. So the next protocol I found, okay, it gets better. Okay, it gets better. So I found this token called Cpool, Clearpool. The token is called Cpool. So this is under collateralized lending for institutions on Polygon. Okay, it gets deeper. Okay, so you can see here Clearpool acts Polygon. So this looks very interesting to me, and I'm going to dive deep into this one. Actually, this looks very great to me because again, under collateralized loans are people like big companies and crypto companies and tons of new protocols will need loans, and you with like centralized or with centralized it doesn't work. Banks don't even want to give loans for this kind of like crypto stuff, and on collateralized like over collateralized lending like Aave, you can't, if you don't have money, you can't get anything out of it because it's over collateralized loans. So these kind of under collateralized loans are very attractive for people who are where this is institutions. This is for institutions, like you can see, for institutions, and so it's very great because it's transparent. It's very transparent and it's global. Okay, and also, well, you can earn attractive risk adjusted yields. So 15% APR on USDC, you can see here. So that's also for lenders who lend money, and then the borrowers who can get under collateralized loans. So this is a new system for that. On Polygon I need to study this more, but this looks good to me. I'm going to look in this because look here again, the prices are very, very low, insanely low, at like 1 million volume. However, the one thing that I don't like about it is that it was introduced in the last bull run. That kind of like, because if something is new, so there's this book called Pitch Anything. I'm trying to find it so I can show you, or I can say, I can't remember who wrote it, but it's called Pitch Anything. Okay, and it talks that humans are just attuned to new. So basically, fast, easy, simple, and new. Okay, that's what we like. Okay, fast, easy, simple, and new. Our brains are wired biologically. So if it's new, if it's completely new, I mean, people will gobble it. It's great. Those will absolutely blow up in the next bull run. However, again, like you can see here, this is like rank 666, so this is a very low cap. So I that's why my portfolio is, I build it with first high caps, 10 mid caps during the boring lows, and in the later part of the when the momentum starts picking up, that's when I really like want to get into the more in the lower caps. And that's when I already have my positions in the high and mid caps. So kind of like I'm already set for the bull run, you know what I'm saying? And then the low caps become this like cherry on the top that can yield and like make crazy like 100x gains, crazy stuff like that. But I don't bet on that because that's like the probability for that is so lower. The probability for AEs to going 10k and the blue chip protocols that have real user adoption going also like over 10x in the next bull, it's just so huge that I want to bet on that like most. And then then I of course also buy low caps, and if they happen to 100x, they probably make even more money. But at the same time, I'm managing risk, because the thing that I want to do is I don't want to lose money. I want to make money, tons of money, but you don't never want to lose money, and you want to eliminate the risk, because tons of new people who come into the crypto space, they just buy too risky stuff. Like they only buy low caps. That is so stupid. You will rewire your brain to never manage risk, and at some point you will keep taking stupid risk and you will lose all your money. So remember, we are here to manage risk. Okay, that's what I have learned. Reading tons, like the investing books and just reading going through it. That's the biggest one. If you want to become wealthy for life, you need to start managing risk. Okay, so another thing that I want to show you here, this is very interesting, this is a more lighter topic. So this is a knowns that, what fuck, okay? So look at this is interesting. So by the way, this is what I learned from a billionaire. He talked about like whenever he sees something, and if the first reaction is that's fucking stupid, like that's dumb, that's when you know that you are onto something. Because if you say that that's dumb, then other people will also say that's just fucking stupid, and then they also lose out on the opportunity. Okay, you can see that's why that's exactly why it's undervalued. It's because everybody thinks it's stupid until it's not. That's the caveat here. So think about, for example, NFTs like CryptoPunks. When you probably, if you before NFT craze, seeing CryptoPunk and CryptoKitties, what did you think about it? You probably were like, that's stupid, or I just like ignored it, and I was like, that's just stupid. But that was the alpha. So here we have something really stupid here, and that's why I think that's why I'm looking at closely to this, because this is so stupid that I'm like, there's probably something into this, because I when I first saw this, I was like, this is so dumb. But right now, I found this like a month ago or something like that. But right now it just keeps going on. So so basically what this is, let me actually. So I took a little bit of notes on my phone here about this one, because I want to share with you. Let me see here. I was doing the research here, so give me a second here. So yeah, so these are, see, this is a nouns DAO. So these are NFTs, right? And how it works is, let me show you here. So you can see one noun every day forever. So there's one of these NFTs every day auction, like you can see, and then people can bid it, and that there's currently 457 supply. Okay, so nouns are experimental attempt to improve the formation of on-chain avatar communities while projecting success banks. So this is a new type of like way. It's daily actions. It's stupid, right? Like you're just like, yeah, but however, so what nouns sit at the junction of content development on and off chain, governance experiment, and treasury management. So this, it's basically a very expensive club. Okay, if you think about it, 63 ETH is right now if you want to get in. 63 ETH. That's like what, it's 63k. So this is a very expensive club. But basically when you get this, you will get one vote. So you will become part of this expensive community. And you know, we saw like, and we are in the bear markets, and people are just buying these new, like, think about it, we are in the bear market and people are bidding 60 ETH. And let me show you how it works. You can look here, and somebody bought it for 72 ETH, 64 ETH, and it just goes on. And look at this, goes on. So this was probably, so now it's I don't know about this one. But you can see it just goes, people buy it for 60 ETH right now. It just goes on. There's even one for 100 ETH and stuff like that. So so yeah, I mean, it's ridiculous. So you know, and we are in the bear market. So if this goes on, and if this comes like a thing, I don't know, you can of course sell it, and you can delegate your you know, DAO governance. You can go to nodes.vtf to just read more about it. Like I said, I've been looking into it. So it has this, you know, it's a new thing. Okay, so this looks pretty interesting to me. So I don't know what to think of it, but you know, I just wanted to show it to you guys if you know, are interested in this kind of stuff. Okay, so yeah, this looks totally stupid, and that's why I think that there could be, this feels like there's something into it. Okay, I don't know what, but it just feels like maybe the, you know, how the community will be formed because of the actions. Maybe this type of thing could be in the next bull run, or maybe, you know, I don't know, but I'm watching it closely. You know, because you know, people with 60 ETH are buying it every day. I mean, that's something. People every single day are buying with $60,000, like this pixel picture. Okay, so there's something there. Anyway, so hey, thank you so much for watching. See you at the next update videos, and peace out.